Hello everyone, this is Progress Affairs. Welcome to my YouTube channel. If you've not subscribed to my YouTube channel, kindly hit the subscription button and turn on the notification bell to stay tuned whenever I post a new video. Guys, you saw the analysis for the last week. It played out exactly as analyzed. And as you can see, the price of gold has sunk down to about 3264 after breaking below the support and resistance level on H4, which I told you once it breaks below it and closed successfully or above it and closed successfully, the price will continue in that direction. All right, today we are going to look at today's analysis. I have already placed this support level for a long time, except this very two DIX and DIX1. I just placed this today because that is the area I'm expecting gold price to return to before coming down again, and I will tell you why. Let's go to monthly time frame. All right, guys, if the price of gold successfully closed below this dodgy body candlestick, then know that the price of gold is going to continue breaching down, and this will happen between 30th and the 31st of June, which is the last day or last trading day of the month of June. So what you should expect here is once the price reacts between this area here and close successfully, then expect something bigger in the bearish trend. So let's go back to weekly time frame. All right, guys, this is weekly time frame. A look at this weekly time frame will tell you exactly what is playing out here. This weekly candlestick closed below the bullish candlestick. It simply means that the bears have successfully engulfed and overpowered the bullish traders, which means there is possibility for gold to do this and continue returning back. But before then, you should note this very candlestick, which is the weekly candlestick. It started here and closed here on the body, and you should know that it has a tail too, which is what you can see the place I placed in the area here, which I marked this shape indicating possible support area. And when you look at the price, by the time we go down to smaller time frame or even in this weekly time frame, you will find out that the price actually tested the support area and started retracing back on the smaller time frame. But before then, let's continue to look at what is playing out on the weekly time frame. There is every tendency that the price come Monday is going to fight between this body of this particular candlestick, which means here on the smaller time frame, price is likely going to range in between this area before coming down to possibly retest the area of 138, which is here, and retesting this place means it will successfully cause what is called break of structure on the weekly time frame, which is at this place. To make it clearer, I am simply saying on weekly time frame, the retracements you are going to see is happening because of the body of this red candlestick. So, which is the demand that pushed the price up to this level before it started retracing back. So which means from tomorrow, which is Monday, you should expect the price to react between the tail here and where the body started bearishing here, which means from this place or either break down or up. So that is it on the weekly time frame. And again, on the same weekly time frame, you should notice, should the price break down, it is going to retest this area of 3,138, which simply means it will result to a break of structure by closing below this body. When you look at the trending, a trend line like this will tell you exactly what I mean. So let's go back to daily time frame. All right, guys, you can see at this point, which is the daily time frame, that it is more clearer than that of the weekly time frame. We continue like this until we get to 1 hour time frame, so that you get to understand exactly what to expect. And I will tell you where your entry should start from, where it should end, and the area to continue bearishing should it break below the candlestick. Just watch the video to the end. Moving forward, I told you about this area, which I told you that the retracement is going to happen before either break up, which I don't think, or break down to retest the nearest support area. And this support area, should it retrace and close successfully, it simply means there is a break of structure here, just like what I told you on the daily time frame. And when there is a break of structure, you know already that the reversal candlestick, the trend has changed 100%, which means that the bears of 100% taking the market, and we should expect a kind of retracement and of course automatic swipe down. So let's go to the 4 hours time frame. Here on the 4 hour time frame, you should understand that, just like I told you, the last tail of the candlestick on the monthly time frame, which I told you is the tail where the market reacted, because like I said, this shape, I already marked them before this time, and that is the areas I expect market to always either reach to reverse and of course or break below to indicate the continuation of the trend. Whereas these ones, I just placed them today. The reason I placed them there is, when you look at this place, you will understand that there's a kind of fair value gap in that area, which resulted to this super engulfing of the order block. When you look at the trading app or look at other trading app, you will see exactly what I'm saying, because every trading app has their own way of reacting to the market. And look at another order block here. So that was why I indicated them with this shape. The implication here is they also indicated a possible 50% retracement of this trend coming tomorrow or probably next tomorrow, before the market will possibly bearish down back to this support level, which means once it bearish back after retracing, there's a possibility of closing here to ensure what I told you about on monthly time frame, that the bearish candlestick, or do I say the trend or the retracement, closes below that dodgy candlestick I showing you area. So let's go to 1 hour time frame to see this clearly. Alright guys, on this 1 hour time frame, you will see that this is the area where the trend started, yeah, and did this. So the implication here is that candlestick that engulfed down, or that engulfed properly of the weekly bullish candlestick, is actually the one that trended down from this area to this area. So the implication here is, when you look at Fibonacci, let me teach you guys something you should learn. When you look at Fibonacci, based retracement extension, you see this, right? I want you to see why the price got to the 100% area. So guys, from what you can see here, you will understand that on this 1 hour time frame, the retracement started here. I mean, the bearish trend started here, and first of all stopped here. And when you look at the retracement, it's actually the 50% of the all retracement it first of all did. And I will tell you why. The reason why it is the 50% is why they told you that you should always sell why it is bearish in the premium, and of course why it is bullish and you should buy at the discount. They are right 100%. So, and when it retraced 50%, right, it bearished down again to 100%, as you can see on this line. So that is why I told you it is a 100% reversal. If you are in doubt, then you do otherwise in the market, coming Monday, your money will be gone. Yeah, because the market is 100% going to retrace, possibly 50% again, or full 100%, because it's going to retrace, because it's a new week. It is going to retrace possibly 50% of the entire trend for throughout last week, which is 50% should be around here. Yeah. So, but before then, let's also use Fibonacci retracement this thing to see if it's actually going to give us exactly that. Let's go to here and get the retracement, Fibonacci retracement. So guys, you can see from the 100% area, yeah, somehow you may ask, why is it inverseward? That's the way to get the exact point you are looking for. So guys, you can see that here is the 50%, here is the 100% from the retracement, Fibonacci retracement. You can see the 50% here, but myself, I used to make minimal entries should I see the reason to continue the trend from this 50%, but in aggressive retracement, I expect the price to get to 60%. Now I want to tell you something coming week, because I told you that since the trend started here and ended 100%, it means the bearish candlestick, or do I say bearish trend, did 100% last week. It simply means this coming week, the possibility of the price, or do I say the possibility of the retracement that will happen on this trend before the price will come down again, is likely to do 100% retracement, which means 50% is likely to be the first stop. The price might come down. That is, the price will do this, come down, get momentum, and do this. Then range around here before coming down again. So that's what I expect the market to do on Monday. If the market continues to retrace up, come down, retrace up, come down, and refuse to break below, it simply means the market will continue going sideways. So let's see how to find our entry point. So I expect the price to come down again to this same area it retested, and of course bullish up. Like I said, you know the area I marked the 50% and the area I marked the 100%. So here is the highest of the order block I expected. So should the price engulf, or do I say whatever the price does inside this order block, I care not. But this is the area I expect the price to get to. This very order block. So guys, this is what you are going to expect come Monday. Don't forget, I told you this is going to happen when the price gets here. It's going to come down again to that same spot, and the rest will be history that will show itself within next week. Thank you guys for watching. Subscribe to my YouTube channel, stay tuned, and of course turn on the notification bell to always get the notification whenever I post a new video. Bye for now.